Hello and welcome to the Relentless Investor Podcast. I'm your host, Caleb Bryant, and I am the Relentless Investor. Today I have on the show with me, Omar Khan. So Omar Khan has 10 years of investing across real estate and commodities experience through a CFA chart holder, $3.7 billion in capital financing and M&A transactions. He's syndicated large multi-million dollar deals across the U.S., and he has advised high net worth individuals and entrepreneurs on their real estate portfolio allocations. And this may be my favorite. He's a global citizen. He's lived in Dubai, Toronto, Calgary, and Dallas. I have one question regarding that. Are you a hockey fan?
I was, and I lived in Toronto for the longest time, and I stopped being a hockey fan.
Okay.
Yeah, the Maple Leafs suck, and the Leafs are, whatever.
Gotcha. 3 hockey towns in there, so I had to ask.
Yeah.
So, Omar, welcome to the show, and I'd love for you to just talk to the listeners about what you've done before real estate and then how you got into real estate.
Well, my story is, I now realize it's kind of a different story, relatively speaking. My background's on the institutional side.
Mm-hmm.
I got out of college, working in M&A, asset management, all that sort of stuff on the institutional side. But my family, though, is an entrepreneurial family. They'd always, and I realize this now, I didn't realize at the time growing up, they'd always park their money in commercial assets. They never really bought, everybody has houses and stuff, but nobody really wholesaled houses or flipped houses or anything of that sort. We'd always park our money in commercial real estate. Going back to before even my grandfather, my great-grandfather, it just was a thing, I guess. So they did it and they kept doing it. So growing up, I'd kind of seen, how to deal with contractors, but then basically put your nice suit and tie on, go talk to bankers and portfolio managers. And you know how to marry both sort of world. But when I moved down from Canada a few years ago, my wife's a physician. So we were just paying a boatload of money in taxes. So real estate was basically, practically we weren't necessarily passionate about real estate like a lot of people are. We just wanted a way where we could basically get a lot of tax write-offs for our income, right? Real estate happened to fit the bill. Coincidentally, at that time, one of my really good friends of mine from Toronto, his dad had bought a huge office portfolio in Houston in the mid-90s. So as the kids are growing up, they want their share of the inheritance. I just helped them restructure the portfolio down in Houston to basically make sure, all the other kids got paid, whereas this guy wanted to keep the real estate for himself, right? So everybody gets paid. He keeps to get the real estate, all that jazz I'm not going to bore you with. And basically, that's kind of how I started. I was working in oil and gas M&A, so I was valuing and running more complex assets than a typical multifamily deal. So when I just started meeting people, one thing led to another, I realized what was saving a lot of people's backside wasn't necessarily their underwriting or analytics or asset management, even though everybody says that. Everybody says I conservatively underwrite. What was saving people's backside was that the market just kept going up. So the market keeps going up, everybody thinks they're a genius, right? It's hard to, in a bull market, people tend to confuse brains with good luck.
Yes, that makes sense.
When I was seeing that, I was like, all right, if I'm talking to you, if I'm looking at your deal and in 5 minutes, I know more about the numbers on your deal than you know about your deal, that's kind of dangerous, man, because I don't know anything to begin with, right? So I just started talking to people, started working with a bunch of guys that I thought were at least better than the other people that I'd met. I turned and burned through about 200 people. Before I met a few of my partners, did a few deals with them, structured their loan portfolios, did the asset management, started doing deals myself, and that's kind of where I am and what I do now.
Awesome. So you would be a syndicator then, for those people that are listening. He tackles big deals. What's your latest acquisition?
So the latest one was in Jacksonville, actually. It was actually on the smaller end of the scale because we were entering the market, and that's about $15 million, 1.5.
Okay, but I just wanted people to get a feel for what you do. And I actually watched a couple videos on that Jacksonville deal.
Oh, you did? Were you stalking me?
Yeah, I was stalking you. You did some Facebook Lives, and I found it interesting the way you were leading up to the deal. But let's dig into some of the underwriting, because I know you're an analytical type, or that's how I've seen you projected in other people's podcasts. So what are you doing to underwrite differently than other people?
Well, I don't specifically think that I have a magic ball or a crystal ball where I can just predict the future better. So it's not about necessarily predicting the future better. It's about preparing for the future in a more robust manner. Because look, frankly, you don't have a crystal ball and neither do I, right? So specifically, again, this was shocking to me coming from the institutional side, that a lot of guys take a weekend course with some mentor who himself has no freaking idea on even how to build an Excel model. You know, they've copied somebody else's crap and now they build their crap on top of somebody else's crap. And now this so-called mentor who couldn't find a real job or can't even buy real assets now is the one giving advice to people. So number one, what I tell people is, look, you really want to test your mentor, and he should be, by the way, able to answer these questions. How about you ask him a very simple question? Hey, man, how about you show me your monthly numbers? So how do you build up to your annual number, right? Because what happens, as an example, let's think about it. Typically, if you've got a value add deal, the bulk of the work, the bulk of the painful work is really the first 6 months to 12 months, or say 15 months, right? Because once you're past that hump, once you're past the renovation, past the value add stuff, really, if you think about it, you stabilize the property. So on a day-to-day or a week-to-week basis, you just have less things to do. I mean, look, if you've as an example, if you've upgraded all the units and you've implemented your business plan, well, week to week, you're not going to have major things happening, right? So really what you're looking for is a month by month analysis, right? Both in your underwriting and then on a day-to-day basis when you're managing the asset, right? Yeah, you know what's really shocking, man? 10 out of 10 gurus online, guys who couldn't find a real job working anywhere, guys who can't even own an asset to save their life, can't do that.
10
you know
out.
why they can't? Yeah, they cannot. Let me say, see, C-A-N-N-O-T, not.
Yes.
They cannot do it because they have no freaking idea what's going on. All of these gurus you see, everybody's become a huge deal after 2008. I mean, you know, if you start buying after 2008, you don't have to be a genius to look like a genius, right? So if you ask about people's track records, if you ask about incisive questions about data, analytics, how do you do the underwriting on a granular level, most guys will jam up. They'll give you a whole bunch of BS that's not going anywhere. So number one, ask about monthly buildups. How do you underwrite on a monthly basis? Because really, if you think about it, your annuals or your quarterly numbers, they're just a buildup. So if you got the monthly numbers, you can build up to a 3-month quarter or a 12-month annual. That's just a byproduct.
Yeah.
Right? Number one. Number two, what you got to ask is for stuff like, say, for instance, you're bringing on additional income, right? Say, let's you push washer and dryers in, or you put reserve parking in, or storage units in, right? Now, a lot of these gurus, or anyone for that matter, say, well, I'm going to put 10 washer dryers in. I'm going to get $35 premium. Day one, it just flips like that. Well, you and I both know in real life, shit doesn't work like that, man. Because what happens is you already got people who have a lease going on, right? So if they don't, either you don't say, turn them over and get new tenants in, or they re-sign their lease when you can then put all these additional income spots into your numbers. Till that time, you can't really just flip a switch because nobody's just going to pay you more money just because your model says you got to get paid more money, right? So how do you build out all these ramps? Because what you can't do is just go like that day of acquisition, boom, I got more money. I got all this flood of income coming in, right? And that kind of plays into that monthly sort of thing. Then on top of that, what you've got to realize is a lot of times that is one part, the analytics. But the other part a lot of people don't tell you is that you need to be able to talk shop with lenders and with brokers. Because I can tell you this, a broker can immediately smell you out within 5 seconds if you're a newbie, or you're one of these weekend warriors, or you're somebody who actually has thought. And by the way, this has nothing to do with your level of experience. So for instance, you could be somebody, say, who's got a fantastic analytical background, or you've got good experience operationally, and you could be, say, 6 months into this game. And they will take you far more seriously than somebody who's been doing it for 10 years, but has been a moron for 10 years.
Yeah.
Right? So it's those sort of things. And it's very hard for some guy on the internet to train you on that thing because if they themselves haven't done it, it's kind of hard, because everybody says, oh, you got to be a broker's best friend. You got to build a rapport. I'm here to tell you, man, nobody gives a shit. Okay. The guy who does $500 million in sales, he doesn't want to be your friend. He doesn't have time to be anybody's friend, because look, and it's nothing against the broker. You got to realize the guy actually has to do a job.
Yeah.
Right. I mean, look, if, you're Joe Blow, you don't have a track record, you haven't done anything, and suddenly you're trying to build a rapport with the broker. First of all, don't you think the guy can just figure out why you're trying to do it?
Yeah.
Right? It's not for some charitable reason, right? That, hey, you're such a nice guy, I just thought I'd be your friend. Right? So you have to realize you don't have to waste people's time. And a lot of these small little things, guys can't teach you that because either A, they haven't done it, or they just don't know about it. And both are very bad situations to be in. You can't be willfully ignorant or stupid.
Yeah, you've got to constantly be learning.
So
And
it's those sort of things, that I tell people, hey, look, the analytics are very important. Don't get me wrong. That's the rock on which a lot of things are built. But there's also a lot of small little things, how you convey yourself, how do you talk, what do you talk about, how quickly can you talk about it, and how quickly can you synthesize and process information. And that basically tells the broker how seriously or not seriously to take you.
gotcha. So I like the month by month thing. And what a lot of people that I've talked to don't do is go through and look at when all the leases end. They don't even know that.
Not they don't do it. They can't.
That could be part of it.
Do not have the capability of doing it. Because let me tell you this, man, look, Donald Trump or Sam Zell, it's not a political comment. Donald Trump is just because he's a good example of like a real estate titan or whatever, right? Sam Zell, Stephen Ross, they don't give weekend courses at the airport Sheraton for $100 a pop. You know why? They're too busy making real money, man.
Yeah.
There's a reason for that.
I got what you're saying. All right. So you then are not a fan of gurus.
No, I'm not opposed to gurus. I like one or two of the guys. I just think people should have a track record before they can become a guru. I have lots of mentors in my life. I really look up to mentors. They've really helped. In fact, they help me every freaking day I have a problem.
Okay.
But they still actually have a track record, right?
Got you. Yeah. Okay. So you want to see what they did even leading up to 2008 to see where they're.
Or not even that, just what their professional background is, what their academic background is. That's something, right? You can't. I mean, look, my point is, my wife, for instance, is a pediatrician, right?
Mm-hmm.
If I have a knee problem, I don't go to my wife, even though she's a doctor. She's a doctor of a completely different thing. She has no track record in fixing my knee. It doesn't mean she's stupid. It just means she's not qualified to do it.
Yeah, understand it. So
it's that sort of a deal.
So for all the listeners out there, if you can go to those events, especially if they're cheap like that, but be aware that they're gonna try to upsell you. And
their whole deal is to tell you some shitty course. This course book, buy my online thing, and you're like, really, man? For $35, I'm gonna become a millionaire? Really? This has got to be the best deal in the world.
So you got to do your due diligence on your guru as well as your property. So going forward, what are some of your goals with your company? Going forward this year?
Look, in terms of units and number of units, we don't have any goals because we're very opportunistic. Like, for instance, last year when I was working with some partners, we did a deal with them in, let's say, January or February. And then we didn't really do a deal for 6 months. It's not like we weren't trying to do a deal. Nothing just fit our numbers. So no deal happened for 6-7 months. And then 3 deals happened back to back. Right? So in terms of units and dollar value, we don't, because we're very opportunistic. Right? If it works, it works. If it doesn't, who cares? Like, move on. Right? It's very numbers driven. Right? But in terms of what we're trying to do is, get a better onboarding experience for our investors, provide more resources, make them basically separate the wheat from the chaff. Right? Because a lot of people out there, they write these fluffy articles about top 5 growth markets in the US. I was like, dude, who gives a crap? Right? If you can't invest in them, who cares what the top 5 are? You gotta give me, what can I do today to become a better investor and a better sponsor leading up to whenever I get a deal? Like, all small little steps day to day. And a lot of these are non-sexy things, right? Following up with people, being polite, diligently saying what you're going to do and do what you're saying. So lots of those things, tightening up processes along the way.
So you obviously look at a lot of deals.
Oh yeah.
Passing up a ton of deals. So
most of them.
What are you guys doing to protect yourselves? It's a hot market, and so you got to be careful.
Well, look, we have, like I told you, we're a numbers-driven firm because, again, most of us are institutional background, so we didn't take like a course of the weekend and try to change careers or anything like that, right? So basically, look, we have an investment criteria. Our typical buy box is 100 to 250 units, $10 to $25 million, value add BC, 10 to 15% below market trends in the chosen markets that we're in, right? Literally, if it doesn't fit that buy box, we don't even look at it, number one, right? So if it's 95 units, I don't even care. I'm not going to look at it, number one. So that right off the top filters, like, say, 50 to 60% of the deals, right? Then, for instance, the next step is, for instance, in the markets that we're in, it fits our buy box. We have like very basic one-pagers built out for my analysts, right? Literally, all they got to do is spend less than 20 minutes, fill out their template for me, and then I'm able to get, because I know those markets inside out. I'm able to get a good idea just by looking at the vintage of the asset, how much value add is left, what rent potential is there, and what capex has been done and what comps are trading at. I'm able, in my mind, to quickly get an idea. We've also done, we've also thrown all these things on Google Maps. So there's a couple of videos on our YouTube channel as well, where you can see how to create a free map. So nobody has an excuse now to say, I don't got money, right? You can literally create a free map on Google with your preferred market. You don't got to go for my market. You can literally choose it for your market, right? And we layer all this data in. So when I'm talking to a broker, within 5 seconds or less, I kind of have a story, right? 50 to 60% of the story I kind of have. If it passes both those filters plus the Google map, we do a property tour. That tells a lot more about us, right? Then we obviously, in our market, we obviously have good relationships with other brokers, lenders, property managers, property owners. I can pick up a phone and call somebody. So if I know down the street, Dan owns 2 assets, right? So I can call Dan. Now, Dan lives, I think he lives in Boston or wherever the hell he lives, right? I can call him up and be like, hey, man, I'm kind of looking at this thing, you know, and there's a professional courtesy, right? You know, if I ask him about something, A, he's not hopefully going to screw me over, he hasn't. And the other deal is if I'm in on a deal, he's not going to try to muscle his way in, right?
Yeah.
So there's a level of professional courtesy, right? I mean, your reputation is very important. So I can give him a call and be like, hey, I know you got 2 assets down the street. They're similar vintage. What are you getting at roughly for rents? Of course, I'm not trying to get all his numbers, but just, hey, roughly, what are you getting for rents? What do you think about the market? He gives me some of that information. I know some lenders, they've done some deals. They give me some of that information, right? So now we've kind of, after the property tour, kind of pieced this together. If it still makes sense after this filtering mechanism, now we're going to start underwriting deeply, like go through the models, go through the analytics. Then if it hits our numbers, then we decide to do another property tour, and then we take the circus onwards.
Got you. So you mentioned Google Maps. What type of layers are you implementing to?
Look, I've got a ton of layers, but practically the ones that people should be concerned about, big picture wise, these are big picture things, right? A is the median income, like you know, you can go under 40. You can do it as many times as you want. I'm just giving you the big pictures, right? Under 40,000, 40 to 60, 60 to 90, 90 plus, right? Median income. To be honest with you, median income a lot of times tells you, it just captures so many things together in one number, weirdly. You know, that again, nothing, you shouldn't rely on one thing, but it just captures a lot of information in one number. Then what we also do is put crime statistics on, right? I just never want to be in the ghetto. I know everybody says cash flow, cash flow, cash flow. I'm like, yeah, you get a lot of cash flow in the ghetto, man. You also get stabbed.
Yeah.
You know, so if you're not alive to collect your cash flow, who gives a crap, right? So look at crime. And then what we also do is put stuff like elementary schools and middle schools, like 6 or higher out of 10. You can go to websites like Good School or school ratings or something like that, right? Do that. And plus what we also pull is stuff like, say, Aldi's, Trader Joe's, Starbucks, Costco's. You know, if they're kind of in an area, and IKEA's in your neighborhood, man, this is a very big company. They've spent a boatload of money trying to figure out what is the optimal location for their $2 billion center. Yeah, just write their coattails, man.
Yeah.
Yeah.
So they've done the research in.
Yeah, just ride their coattails, man. You're not going to spend more money than Amazon, you know?
Yeah. Yeah. Awesome. So this part of the show, we go into 5 questions that I ask everybody.
Yeah.
And the first one is, what is a song that motivates you?
Oh, man. There's 2 really trashy ones. Don't Stop Believing by Journey. What a freaking awful song, but I don't know why it motivates me. Okay. And then what was this? Aces High by Iron Maiden, right? Oh, this is the greatest one. Kickstart My Heart by Motley Crue. Straight up. Don't have to listen to any of their songs.
I think the reason Journey made the list is because everyone in a room will start singing it with you. So it just.
But I always want to take a lighter. I don't even smoke, but I want to take a lighter out and go like this.
What is an example of when being relentless benefited your business?
All the time, man. Every single day, you got to follow up with investors, brokers, lenders. Even when, you know, they don't have a deal and you cannot do a deal because let's assume you're in 2 deals right now. But you just got to keep following up. And the way I look at it is I just put reminders and tasks. So it becomes less of a chore and more of just a thing I got to do.
Yeah.
You understand? It's not like, oh my God, I got to email this guy, you know? It's like, oh, whatever. Got to email John or Mark or Steve. Just email him. It's like a checklist then. So it's kind of relentless, but the frame of mind has to stop it being a chore as opposed to a thing you do, like brushing your teeth.
Put it down into the subconscious is what
It's that sort of a deal, right? Hey, check it off, check it off, check it off. That sort of deal.
Gotcha. If you could only recommend one book to anyone for the rest of your life, what book would it be?
Black Swan would be a really good one by Nicholas Taleb. Or even, what is it? Thinking Fast and Slow by Daniel Kahneman and Amos Tversky. It's basically about how people, it's about behavioral economics. It tells you how people actually make decisions as opposed to scientifically how they should be making a rational decision, right? Because we're all prone to biases and gaffes and all of that. So it kind of delves into that and basically tells you how people actually perceive what you throw out there and then how do they process it.
I'll have to check those out. I haven't read either of those.
Yeah, you'll actually like it.
How do you like to give back?
Oh, I volunteer on and off. Then we've also, what we've done is, because I'm a lazy person. I don't want to use my brain too much. For the charities that we do, we've just put them on a monthly auto charge, right? Yeah. Because what I've seen is what happens is at this, whatever, it's either after Christmas or in the middle of the year, it's like one of those, I'm going to lose 30 pounds sort of thing at the start of the year. People get really excited. And then by March, they've kind of lost all interest. Yeah. So what we decided to do was just put these things on auto charge, right? So then I don't got to think about it, but money's going into the charities that we want them to go to.
And that's awesome, because a lot of them will get those one-time donations, but it helps them more throughout the course of the year.
And for their side, it's stability of income, so they can plan better as well. Yep. Not that my donation is helping them plan a lot of things. I can be I'm not giving that much, unfortunately.
That's okay. You'll get there. How can listeners get in contact with you?
Hey, I thought you'd never ask. You can email us at omar@boardwalkwealth.com. You can also go to our website. Right on the homepage, we've got a little form. It's really easy. It's got 3 fields only. You know your name, so input your name. You know your email, input your email. And in that little box, how'd you find out about us? Say Relentless Investor Podcast. It really cannot be more simple than that.
Awesome. Well, Omar, it's been a pleasure having you on the show. I love the insight you bring in the underwriting and analytical areas of this business. So thank you. And I'll look forward to speaking with you soon.
Yes, sir. Thank you very much. Have a good one.